my best relationships with founders are those that they'd call me and say, "Hey, this and this is happening. Could you help me relay this to the investors? How would you react to this? This is what's going on. I need some advice." And remembering that we're on the same side.
Welcome to 20-Minute Leaders. Just sit back, relax, and learn from the leaders of today. It's a journey. Each one is different, unique, inspiring. Let's get started. This episode is powered by J Ventures, a community-driven VC fund in Silicon Valley in partnership with Leumitech, sponsored by Homeward Ventures, Hippo Insurance, Upwest Labs, Synergy Global, Hillel at Stanford, Leap, Birthright Excel, Serona Partners, and in media partnership with CTech. Welcome to 20-Minute Leaders. We're talking to another different story of venture capital. Meet Liron Azrielant, managing partner of Meron Capital. Liron is the general partner at Meron Capital, and she has over 10 years of experience in the venture capital, private equity, and tech industries. She also manages the Young Venture Capital Forum in Israel, a professional organization connecting over 250 young partners, principals, and associates from all VC firms in Israel. Prior to joining Meron Capital, Liron was a principal at Blumberg Capital and led cyber, SaaS, marketing tech, and infrastructure IT deals. Prior to that, she was a strategy and M&A consultant at Bain Capital and PwC's PE Group in New York, where she led commercial and operational due diligence projects for the largest private equity firms in the US. Before moving to the US, Liron was a technical applications engineer at Agilent Technologies, where she worked with blue-chip clients in Europe, Asia, and the US. Liron holds an MBA from MIT Sloan, an MSc in computer science from MIT, and a BSc in math and physics from the Hebrew University of Jerusalem. At 25, she was the youngest student ever to graduate MIT's dual MBA and MSc degree program. She started her bachelor's degree at Talpiot, the elite Israeli Defense Forces program, and completed it while serving full-time as a technology analyst and researcher at the Israeli Intelligence Unit 8200. I think that you really do embody, how I think of, the right investors, right? And, the persona that I would say, okay, this is a person that, that has gone through some really meaningful things in their life, whether it be the Talpiot program, for example, one of the most incredible things that a person can do, with intellectual rigor, not to mention then transitioning to doing your MBA and your master's at MIT and now a Kaufman Fellow for the last 4 years and also transitioning within the VC space, growing throughout different positions, which we'll share in a minute, but growing to be more in a decision-maker seat, deploying capital into some amazing companies with a very, very impressive portfolio under the fund that you're leading now, Meron Capital. And so a lot of decisions to unpack here that I'd like to pick your brain about. But I'll start off asking you to share with me just a little bit about your journey. And if you look back, what are some of the big milestones that you recall that made you who you are today?
Sure. And I guess before diving into the details, allow me to kind of divide my story into two parts, because I honestly only think that the latter part is significant or of significant interest. And I'll say this, and I'll say why. So Talpiot, MIT, Agilent Technologies, the path that I took probably up until I was 28 or so, has a lot to do with getting accepted to places. And honestly, I'm pretty good at getting accepted to places. It's about storytelling, it's about positioning, it's about marketing, it's about kind of understanding where you're getting, what they're looking for, what you have, and bridging them. And that's great. That's a great skill, but it's not very operational. So just briefly, like you mentioned, I got accepted to Talpiot when I was 17. I did most of my undergrad there, left the unit to join one of the top units at 8200. That was also getting, let's say, you start getting job interviews at the Army, which is kind of surreal, but that was also kind of a getting accepted move. after I both graduated and finished the army, I went to Agilent Technologies, then a dual degree at MIT, Bain and Company, PwC, and then
Mm-hmm.
I came back to Israel to join Blumberg Capital. So yeah, like I think it really helps to be in a lot of these top places. But if you ask me what I'm the most proud of, it's absolutely founding and building Meron Capital, because this has nothing to do with getting the approval of someone standing at the door, some selector saying you get in, you don't. This only has to do with results and how much money I'm bringing my investors. Of course, you need to sell your investors. So, being really good at positioning and selling or fitting, understanding what the pattern is and drawing the line between who you are and what that is. So that helps, but unless you bring money over money, this is all meaningless. Like, you get measured at the result, and I think, and so if you ask me, even though Meron Capital, well, it's starting to be a brand now, but it's hardly a Sequoia at this point. It's the part in my resume that I'm most proud of.
Fantastic, and I have no doubt it will be a Sequoia in no time. But of course, I don't want to undermine knowing part of the experience myself of working within the unit and going to some of these colleges. At the end, yes, it's about getting in, but once you're in, it's incredibly intensive. I mean, the amount of sleepless nights is almost unbearable, and the stress and the pressure and the intensity, and I do think that it says a lot about a person who goes through their stages and consistently performs at the highest degree when they're called up to the moment, right? I mean, it's not just about getting in with a great story for MIT, but then you're actually going and doing a joint degree, an MBA, and a master's. I mean, it doesn't go easily. But transitioning a little bit to this idea of investor. So take me, you're very technological. You are hands on, and you finish, your path within the army and within the academia and within the world, but then you transition to Blumberg Capital as an investor. Was this all sort of the plan to then at the end become an investor and create your own fund? Was this the big plan for you?
No. So I think I always kind of wanted to be a CTO, like a technology leader and a founder. Yeah, great question. Because I think one of the shocks that I got when I started Meron Capital is so I was moving from being a principal at Blumberg Capital, a
Mm-hmm.
fund that had an existing brand, existing deal flow, portfolio, exits, track record. And I wasn't the decision maker. So honestly, when deals fell through, when founders decided not to go with us, I wasn't even always the one receiving the no. So I wasn't even all that much aware to the level an investor needs to sell himself, and how much it's about being wanted, being valuable by the right founders and right people, and not necessarily about making the right choice. So yeah, that was quite a shock, especially quite an expensive lesson to learn when you're starting as an investor and as a decision maker in your own brand. But I think both my partner and I learned that pretty fast.
Mm-hmm.
And
Can you speak a little bit more about this, because today there is it's a founder's world, and this idea of the investor selling themselves and bringing value to the partnership table, because if these are the right founders working on a good product, I mean, they're going to have a bunch of options in today's world, right?
yeah,
And so I understand the term, the way you have to sell yourself, but how does it actually go in the tangible world? Let's say, you meet a founder that you really want to invest in, and obviously you have others that want to invest in them too. What happens now?
so hopefully that doesn't happen. Hopefully I meet a very strong developer considering to become a founder, considering starting his own company, and I meet with him, her every few weeks. We ideate together. I connect them to other founders, and hopefully, before they even realize they become fundable, I realize that. So our best
Right.
deals are ones that we help grow, and that's for two reasons. One is because these are the founders that understand our value the most. They've had the most chance to see what we bring to the table, how we help, and how we respond to, say, imperfect plans, imperfect situations. So they kind of have a chance to test drive us as investors. And the second thing is that I absolutely hate the 24-hour term sheet. So if and I've seen some funds pride themselves of it, like we can give a founder a term sheets in 24 hours, and okay, that's a shotgun marriage. So you're forcing the
Right. Yes, it's eloping.
yeah,
That really is what it is. Regardless, for good and for bad, you're eloping. And I have to say, I agree with that. It drives me crazy thinking, okay, in an ideal world, nobody would give a term sheet within 24 hours and nobody would give a term sheet within a week. There's no way that you've exhausted the due diligence process that you need to do in order to deploy, potentially millions of dollars. So if the market is the force that's driving behind this intensity, I just love your model of going back and saying, wait, we're playing a different game. We actually understand that the real due diligence here is not just on the founders and the problem, but it's also on our relationship. What happens when we do meet every 2 weeks? Do we enjoy these meetings?
right,
Do we dread these meetings? And then we say, okay, wait, we actually want to continue this partnership. And now the investment is not just, it's not just the money. We've already invested our time. The money is just accompanying the fact that we
right,
are solidifying this engagement through sort of a marriage, right?
right, exactly that. And honestly, with the 24, 48, take 72-hour term sheet, investors have no idea how the people they invest in respond to feedback because there wasn't any feedback. There
Right?
was a one-sided
Yeah.
conversation. And we noticed because they mostly came to us with a pretty bad idea or an idea that wasn't fundable at that moment. But we saw something in the team, in the potential, and that's more important. And the funny thing is the industry is so crazy right now that sometimes while we do this process before we're willing to say, okay, they've hit something, other funds swoop in and take the deal. And that's totally fine because we do it in our own time. We work with enough, and when I say enough, it's still a handful, but we're like diamond pickers. We're spear hunters. Not we're not fishing with nets. So
I like that.
yeah. So the conversion rate from meeting a founder is high enough. Meeting with a founder
Mm-hmm.
regularly is high enough that it's scalable for us because we only need
Yep.
3, max 4 deals per partner per year. So that's something we really, really like doing, and those were our best deals. Hopefully we're about to do another deal like this pretty soon. So yeah, and I think in a lot of ways that's our differentiator. We do sometimes do deals that have the normal process, and I think those
Mm-hmm.
are a little bit more deals where we feel we see something that the others don't. We feel like
Mm-hmm.
there might be some reason to not do the deal, but we feel like we see past it. And those deals we love as well.
Fantastic. I mean, and I think that it's so interesting from a founder's perspective. And I haven't been there myself yet, so it's hard for me to gauge, the emotional state and the mental state. But I'm thinking, you're going on this 10-year journey potentially, and you want to understand who your investor is as well. There's no way you've also done your due diligence, and I understand the market play, and you have momentum and you want to close, but I'm always thinking, once when I'm in the process from an investor's side. And the founder tells me, sorry, we've just signed the term sheet. And I'm like, wait, but didn't you want to spend at least 2 more days talking to the different parties, engaging what's happening? And how much would you lose in those 2 days? Because you're married now. So it's anyways, that's my own little vent. But Liron, if you're looking at now Meron Capital financial, as a investment body, but in the tech sector, what is sort of the thesis? What really are you looking for with Meron Capital?
So that comes back more closely to the last question than you think, because since we do hunt with a spear, it's more like the team is a lot more important, and the deals that we identify as deals tend to be more important than thesis driven or betting on the right market. So we do have markets that we perceive as strong and markets that we perceive as weak, but we put this into play when we have those discussions with the founders. So our thesis is strong, resilient founders operating in growing markets with good dynamics. And honestly, we're open to having a founder convince us that a market that we see as difficult or not great is actually has enough merit to warrant his time spent there. And this is actually the deal we're looking at right now.
And if you're looking at more broadly, sort of the way that you like to engage and interact once the deal is made, right? So your involvement with the founders, and right prior to the call, you mentioned a few instances of how you are actively engaging with the founders, not just on the on a coaching level, but also on a business level. So what is sort of your preferred engagement style with the companies that you invest in?
So I think in this structure, we're the trusted party. So my best relationships with founders are those that they'd call me and say, "Hey, this and this is happening. Could you help me relay this to the investors? How would you react to this? This is what's going on. I need some advice." And remembering that we're on the same side and not stressing and realizing that most businesses fail because of notwithstanding the heat, rather than maybe not making the most accurate decision, and having us care for the founder. It's not really peace of mind, but it's like continuous resiliency, because it's a marathon. You need to stay strong. It's something that brings tremendous value, and this is what we strive to bring.
I love it. And Liron, I really want to thank you for opening up with me. A few interesting questions here. I think that we got a little philosophical there for a bit, but those are the important questions in the end. And I entered the VC world not from a financial perspective, and I constantly think about this dynamic of, at the end, what are we trying to do? We're trying to build great companies, and we have different sides. And it sounds like you coming in from the very hands-on side as an operator, but with the operator mentality, not necessarily a former CEO, but an operator mentality, and you very much see yourself as a married partner to the entrepreneurs, which I think is the healthy way of looking at these investments, which is. And it's interesting to see what's happening with the markets today. And obviously we have also a few co-investments together, and I keep hearing just amazing things. And I really thank you for your time, and continue making great investments into great companies, and stay safe and stay healthy.
Thank you.